Robin, your first take on these numbers.
Thank you. I think growth has bottomed. The recovery just started. It's still a very incomplete and bumpy recovery, but we have seen the worst. The worst is behind them. Yeah.
How can you be so confident?
Well, first of all, they are recalibrating the COVID strategy. They are replacing citywide lockdown with regular testing, allowing some normalization in supply chains and factories, right? It's not going to be like testing their way out of COVID, but it's a recalibration. Basically, for factories with closed-loop management and daily testing, it's easier to resume all these logistics. Secondly, stimulus is ramping up. On consumer, there is a handouts. On housing, there is more and more mortgage and down payment ratio relaxation. And finally, there is an infrastructure push. So I think with the ramping up on stimulus and the recalibration on COVID, it's going to see a recovery.
When are we going to see that full recovery? That you said it has been uneven so far.
Exactly. I mean, a full recovery still largely depends on a COVID exit strategy. And before they can get the public health concerns, vaccination to a level which they are more comfortable with fully reopening, we're not going to see a full recovery. In the third quarter, it's more likely to be a subpar recovery led by the supply side. Consumers are still lagging, thinking about the testing, the time and this cost related to testing, they are still constraining consumption.
Yeah, I mean, I think what we're getting at is what is now the read-through from growth? Does this move the dial at all?
Yeah, I mean, the growth number you mentioned, they all beat expectation. The fact is China had a combination of shocks from COVID restriction, regulatory reset, plus they didn't provide enough stimulus. Now they are fixing on stimulus side, and there is definitely signs of regulatory easing on big tech, on housing. Well, COVID restriction is still there. Some recalibration, but still there. But I think with the first two easing signals on regulatory reset and on policy stimulus, you can have at least have some incomplete recovery in the third quarter.
What is the window for easing now? Because I take a look at where spreads are between China and the U.S., and we're seeing very deep discounts. This policy divergence that continues to widen. How high is the bar for more rate cuts now, just given the policy divergence we've seen?
That's probably the most fascinating story for this year. I mean, I was in US and the UK for 3 weeks. The business is largely back to normal, but inflation is dominating every single conversation from breakfast to dinner, right? Now, in this part of the world, demand is lagging, but China is probably the only country who doesn't have any inflation problem. Core inflation is below 1%. So we do think
that in itself is strange when you look at those CPI numbers and you adjust them the core versus the overall number, that it seems that China doesn't have a problem with food inflation and the rest of the world does.
Well, food inflation, of course, there is some, but they are lucky because their hog supply is still in an excess supply cycle. That helped them. But it's more importantly for the core inflation, which is driven more by services. Given the demand in China on the consumer, on mobility is still lagging. They don't have any core inflation problem. But the problem is more like they don't have enough stimulus and there is too much restriction because of COVID. So while the world needs some tightening, hiking to contain inflation, China needs more easing on both COVID restriction and policy stimulus to have the demand back.
Yeah. So with or without rate cuts, then should I expect then that capital outflows will continue?
Well, I think it's, first of all, China's inflation give them the room to ease, including both rate cuts and all these credit easing from relending or quantitative tools. That's why the total social finance data came also quite stronger. But it's also because the divergence between US and China on the growth outlook, that contributed to the bearish sentiment on China. But if they can use easing and less restriction to stabilize confidence, to restore some of the economic momentum, that's actually good to contain outflow. I don't think that easing will trigger more outflow.
Robin, but I mean, post-COVID, though China's still in COVID, if you will, has the structure of the Chinese economy altered? I mean, we're looking at capacity utilization figures, which are quite shocking here as well. That may not come back. That's just actually potential utilization. Given how rejigging of supply chains has gone, how do you see this structure evolving?
That's a great question. This is about, is there permanent permanent scarring
That's what I'm getting at,
on the
yeah.
Chinese economy, right? You mentioned the supply chain relocation. I think it's going to accelerate given geopolitical concerns is becoming a bigger factor for multinational firms on supply chain. There is also regulatory reset in China on everything, putting things like security and self-sufficiency as important as growth. So I think they will have some impact on the long-term growth potential in China. But talking about next year, given all this cyclical easing, the pass-through of this easing could be amplified once China can transition from COVID zero to a more normalized level. We do expect a decent bounce next year to about 6% growth. But for the medium to longer run, we have seen a slower growth potential, probably 4.5%, definitely lower than before COVID.
So more upside risk to that forecast or lower at this point, you think?
I think it's more balanced now. I mean, 2 months ago, people are cutting growth. Now with the recalibration of COVID strategy and stimulus, the risk is definitely more balanced.